Welcome to the Takeoff Experience, where I sit down with highly driven people to talk about their journey, their failures, and their successes. If you want to take off in your career, your business, your finances, or your mindset, then this podcast is for you. Welcome back to the Takeoff. So this is the first episode that I recorded in the new year, and it feels good to be back. I know y'all miss me. I see some of you still listening to the podcast while it hasn't been out. So I'm very, very excited for today's episode. We have my boy Topsy, who is a property expert, and he provides some of the best content on property for first-time buyers as well as property investors. And I know we've had a few episodes on property, but I wanted to get a bit deeper into it so that we can focus on first-time buyers and first-time property investing. But we'll see how this conversation goes. So how are you doing today, bro?
I'm good. Obviously, we spoke a little bit beforehand, been a little bit under the weather, but I'm recovering nicely. Yeah. So I'm all good. Yeah. Just trying to make it a good year.
Yeah. Yeah, bro. I see you posting content still. You're like, yeah, I don't care if I'm ill, I'm still gonna post that content.
You know what's funny as well? Like, I sometimes feel like I'm lacking. I'm not doing it anywhere near enough. And then people say, I see you all the time online. I'm like, what? I'm not posting like a week, but not posting in a week for some people is like not posting in 25 years. Whereas if you post once a week for other people, that's too much. So, yeah.
It's crazy. It's crazy with the whole like social media stuff, because you're right. For some people, posting a week is more than enough to see you, right? They only need to see you once a week, and that's enough. For others, it's all the time. I think honestly, whatever you do that works for you, it's the best way. For me, I came to a decision that I'm only gonna post on Instagram twice a week.
Yeah,
I've got my days: Tuesday, Thursdays, maybe Fridays instead of Thursdays, and that's it. Keep it like that. No pressure on me. Can get my quality content out. Hopefully, people enjoy it, and then move on to the next week. So yeah, man. I hope that you start to feel better, and I appreciate you.
Sorry, I was just saying, if you speak to Gary V, he'll be like, you got to post 25 times a day. TikTok, Instagram, Twitter.
Yeah, man.
Every 5 minutes.
Yeah, that's toxic, man. In my opinion, that's toxic, man. Like, I don't think that's the blueprint, to be fair. But each to their own. At the end of the day, and I appreciate you, taking the time to jump on the pod. I know the listeners are definitely going to appreciate everything that you have to say today. So we always start the podcast with this question. This is like the most important question on the podcast, to be fair. What is your worst financial mistake?
I've made so many. Where do I start? Worst financial mistake. Let me think about that. Okay, the one that comes to mind straight away, I think it was my 25th birthday. 25th or 24th birthday. I booked a table at a nightclub. I can't remember the name of the nightclub. It was somewhere in central London. And I just sort of didn't really pay attention to how much the table cost was going to be. I was just like, you know what, I'm going to invite everybody, pay for everyone's entry, and I'll do it at the end. It can't be that bad. Got a little bit carried away, got a couple more bottles of Ciroc. End of the night came, it was like 3 a.m. Half the people had left. And then table service came to me, goes, oh yeah, here's your bill. I was like, oh, okay. I looked at the bill, I was like, excuse me? It was like $2,500.
Wow.
$2,500. I remember I just...
What? $2,500? Aye, that's crazy.
It was insane. I think it was around $2,000. It was insane, and I just had to firm it and stick it all on. I think 2 credit cards at the time. So I remember I was paying that back for a long time. So that's definitely the worst financial mistake that I can immediately think of.
Wow, that's crazy. So you're never gonna book a table again, right?
Nah, but I don't.
You're scarred from that situation.
No, I don't think I booked a table since.
Wow. You know what? The table thing. Honestly, I've done it, and I just feel like it's overrated in my opinion, because I feel like you're just stuck. Like you're basically a tree in the club. You're out there to walk around, go to the bar, dance. When you got a table, you just got to stick to it, because you want to guard your bottle like you're in a war or something. It's a bit mad. Wow. Interesting story.
Yeah.
Wow. Crazy. See, our favorite financial influencers, man. We all go through these things. So wanted to just get a bit of an insight. So can you give us a bit of an insight into the day in the life of Topsy?
Yeah, sure. So I work 9 to 5. Currently, I'm actually not in a 9 to 5 at the moment, but typically when I am, I'm
Okay.
doing my job most of the time working from home. But I do my business on the
Okay.
side, which is property purchaser, which
Okay.
essentially provides
Okay.
knowledge, advice, and services to first-time buyers in the form of property reports,
Okay.
also property chats and referrals to any professionals that they may need to speak to as well. So that's what that business does, as well as the
Okay.
content thing. And then on my personal side, I'm also a presenter. Done a few YouTube bits here and there, appear on the BBC every now and again, make content online, and yeah, just trying to build myself within that media space as well. So yeah, I would say the job, the content from my personal standpoint, and the business is what keeps me occupied. Hence why I typically work. From home.
Okay, yeah. Because I heard you and Clarence. Shout out to Clarence. Yeah, on the radio twice now. You guys smashing it, you know.
Yeah, yeah,
BBC, it
yeah.
was BBC Radio One, isn't it?
No, so
Yeah,
that
yeah, yeah. That was sick,
was
man.
BBC
And
at the time. Yes,
was it
that was
BBC Radio One?
BBC Essex. I've been on.
Yeah, this year. It was this year, and then you did it the year before, right? Yeah,
That's right. Yeah, yeah. I've been on BBC Radio
yeah.
One quite a few times. BBC Breakfast, like a lot of the outlets. I've been on quite a few of them, but what me and CK did was BBC Essex. Yeah, just discussing first-time buyers, the market, and mortgages.
Yeah. Yeah. You guys smashed it. Like you provided so much gems, which is why I wanted to get you on. And like it was so natural. There was no nervousness. I mean, were you nervous actually behind it? Were you like, like the
You
bit?
know what? I want to say that I was, but if I'm being totally honest with you, I just really wasn't. I remember
Yeah.
the first few appearances I did on radio. Of course, I was nervous. I didn't want to say anything stupid. I didn't want to embarrass my family, you know.
Yeah.
But I've done it quite a few times now, where it just feels like a conversation between you and the radio host or
Yeah.
you and the TV host. And so long as you don't think about anyone watching, you have a good conversation. But also bear in mind, you're trying to offer value to anyone listening. I don't tend to get that many nerves in them, being honest with you. But yeah, I just want to make sure that
Yeah.
I'm offering value. You know, it's exciting to be on radio, it's exciting to be on TV, but it's more important to make sure that you're offering useful information to the listenership.
Yeah. You see, this is what I'm saying. Like you just got the right attitude, and that's what I love about you and your content, man. It's just coming from the right place, in my opinion. So okay, so I wanted to take it back a bit.
Yeah.
To how you actually got to where you got to, right? So okay, let's take it back to the beginning. Where are your parents actually from?
Yeah, sure. So this feels like a live story. I like it. So I was I'm from Nigeria. Parents are from Nigeria.
Okay.
Mum was born in the UK. Dad was born in Nigeria. Both settled here around late 80s.
Okay.
I was born in 91.
Okay.
I'm 30 years old. And then just always lived in and around North London, then Hertfordshire, and then bought my own place in Watford. In Watford around 7 years ago.
Okay.
She rented it out and then moved into it about 6.5 years later, towards the end of last year. And then in terms of work, just always worked within the property industry ever since I graduated from university. I studied international relations and economics.
Okay.
What I was going to get into politics, what was going to be,
Oh wow.
This, a political mastermind. And then, I just ended up in a state agency, and the rest is history.
Wow. So I wanted to actually ask you, so what tribe are you, Nigerian?
Yoruba.
You're Yoruba. Okay, cool. I don't have a problem with any tribe, by the way. I just putting it out there for any of the listeners. Yeah, I'm Nigerian too.
Yeah.
Okay, so my dad's Ijaw and then my mom's Igbo. So yeah. So plus my mom's like Sierra Leonean as well. So like I'm a little bit of a mix. Wow. So okay, so that's how you went. So I was going to actually ask you. So you did go to university. You said that you studied. You said, was it economics and international
economics?
Okay, that's interesting. You know, I wanted to actually do international relations. So I did a law degree, and I wanted to do law and international relations because I was always interested in global politics and all that sort of stuff as well. And I wanted to do like the whole traveling thing, but I was like, you know what, let me just leave it. That's crazy. Wow. So you had a very, very, very varied background. And you said that you went into an estate agency.
Yeah.
Was that your first job?
Correct. Yeah. So
okay.
For 6.
All right. Okay.
A company called Foxtons. I was
really... Foxtons. Yeah, company called Foxtons. You're saying it like it's light work. Foxtons is big, you know.
Yeah, I was there at Foxtons. Got promoted really quickly. I ended up being a manager of, a couple of North London offices. Sorry, one North London office. Then after that, I just sort of felt like I'd reached my learning curve. So I wanted to get more into the tech side of the business. And for the last 2 or 3 years,
Okay.
I've sort of been in what's called prop tech. So, the part of the industry which is trying to make property and just everything within that industry more efficient with any technological solutions that they can provide. So a number of different companies. I won't bore you with their names, but that's what I did during that time. But also over the last 3 years, I set up my own platform, Property Purchaser, which has really got me within, which is what got me within this space of, providing content, providing value, and also services to first-time buyers and property investors as well.
Wow. I love this story so far, man. This is sick. Because I was gonna understand why estate agency and why property and not nothing else.
Yeah, it's a good
You
question.
know why?
I mean, to be honest with you, I think I applied for the job because I saw that you got a company car and loads of commission. That's literally the only reason.
Yeah, that's good perks.
Yeah, exactly. There was a website called milkbrand.com at the time. So I just saw the first job on there from Foxtons. I applied, I got it, and didn't really think twice about doing anything else. I initially thought I was going to go into professional services, Ernst & Young, KPMG, Deloitte, PwC, or potentially even investment banking, JP Morgan, Citigroup, Goldman Sachs, Barclays, but I wasn't good enough to get past any of those assessment centers. So I just ended up going to an agency. So it was really just by default, if I'm being honest with you. But then I also realized I really like speaking to people. People have called me charismatic. People have said I'm a good communicator. I'm a good presenter. So I ended up really enjoying the job and learned a load of what I would call sort of key property knowledge and key property skills during that time as well, which is pretty much what I place as responsible for me being able to buy a property as young as I did.
Yeah. You see, this is what's so interesting because I used to work for the Big Four. I mean, I only just literally left one of them in December, right? And just like you, I think after I finished my masters, I don't feel like I was at that point in their eyes good enough to get there, right? At that time, right? Or as cleaned up as they would have liked, which is interesting. But then I ended up working there later on. So I feel like the lesson is even if you like feel like you're not ready or you're not good enough at a certain point in time, that doesn't mean in the future you're not gonna be ready for it. Do you know what I mean? I mean, if you wanted to apply there now, I'm sure that it would probably be light work for you.
Yeah.
Because of all the experience that you've gained. So yeah, wow, that's crazy. So I wanted to ask you, because you've been in property for so long, what's the one thing about being in property that surprises you?
That surprises me. I would say that I'd probably say that because I've worked in it for so long, a lot of the knowledge that I have sort of feels like it's general knowledge, like everyone would just know it. But it's not. So whenever I'm providing advice, whether it's on mortgages or whether it's on the home buying process or what schemes are available to you or how loan to value works or how the income ratio works or what leasehold is, what freehold is, what a service charge is, what a management company is. This is stuff that I assume is general knowledge. But then from speaking to people and from the questions I get, there's a lot of people who are first time buyers who haven't bought yet who quite literally know nothing. I can't remember the specific statistic, but I think it was something along the lines of around, I think 60 or 70% of those aged 18 to 35 don't understand how a mortgage works. I can't remember what sample size that was or what company gave that statistic or even if those statistics are actually accurate, but it's along those lines and it sort of just tells you that the knowledge gap is really significant. So a big part of what I do is to try and fill that knowledge gap, but also make people laugh along the way whilst I'm doing it, which is why I make all of those sort of funny videos as well.
Your reels are lit, man. I like them. I really like them. And you know what? It's true what you're saying in terms of when you gain knowledge. Sometimes you forget that now you've gained this knowledge. Other people haven't gained it. So when you're saying stuff, they're like, "What are you talking about?" I don't have a clue what you're talking about because at the end of the day, none of this stuff you gained your knowledge from being being in the estate agents. You heard the lingo. You probably asked them, "What does this mean?" You've viewed probably hundreds of property. You've probably gone through so many deals. So you have all of that experience. Whereas a first time buyer, they're like, How do I buy a house? What do I look for? I mean, even just the basic of what do you look for? We're not even talking about the financial aspect or even going through the process. It's so like there's so much to it, and there's so many like pitfalls. Um, Going on to pitfalls, what would you say has been the biggest challenge you've had of being in property yourself?
Biggest challenge from a career perspective was probably was probably just learning how to manage disappointment. So being an estate agent, you definitely
Okay.
come across a lot of disappointment. I would say around 30%
Okay.
of all agreed sales fall through. So in this country, nothing is actually legally
Really?
binding until nothing is legally binding in the
Yeah.
contract of sale until exchange of contracts have happened. So around 30% of sales that are agreed
Okay.
through. So as an estate agent, when you look at your pipeline,
Yeah.
you're working out your commission, you're working out how many tables you can buy next week, and then all of a sudden that sale
Yeah.
falls. So learning how to manage that disappointment and not letting it affect you to when you're approaching your next sort of prospect is a really important skill and a
Yeah.
difficult learning curve that you have to go along.
Okay. Wow. Yeah. Ah, It's it's crazy because when you were saying that, I just remembered that in Scotland it's different, right? Is it
That's
as soon as you what is it again? Is it as soon as you give some kind of verbal confirmation? It's like
yeah. If I'm
it's
honest,
binding. I can't remember what it was called.
I don't know the exact home buying process in Scotland, but I believe the legally binding element
Mm,
comes a lot sooner. So you're not sort of kept in limbo,
yeah,
for months,
yeah,
months on end. So that's what's slightly different about the process in Scotland, I think.
That's stressful, man. Like stressful. Even you're telling me, even after people pay their deposit, they're just pulling out sometimes.
No, so deposit is got two definitions in the context of property. So when you exchange
Okay,
contracts,
okay,
the solicitor requires you to put
mm,
down a deposit, which is typically 10% of the value of a sale, which acts as a security, which acts
okay,
as collateral for those contracts to be exchanged. But the other definition of a deposit
okay,
is how much cash you're putting down to actually buy
okay,
that property. So if you've got a 25% deposit
okay,
and a 75% mortgage, that's your cash deposit. But in the
mm,
context of exchange of contracts, a deposit is what's used as security and collateral in order to exchange contracts. So if you pull out or if the sale falls through after exchange of contracts, then there are repercussions for that.
mm-hmm,
Typically,
okay,
whoever sort of caused that fall through is the one who has to pay the consequences for that. But it can get quite complicated, and solicitors are on hand to deal with that process. I've rarely seen it. I've rarely seen deals fail to get to completion
mm-hmm,
after exchange, but it does happen every now and again.
mm-hmm. Okay, okay. All right, okay. So let's talk about some of these terms because I wanted to go into first time buyer schemes, but I thought it would be appropriate if we just talk through the whole process. Because
Yeah,
first time buyers, they've never gone through this process. I've gone through this process. You've gone through this process
yeah.
several times. So let's talk about the process and let's break down what they mean. So okay, so imagine I was a first time buyer and I found a flat that I really liked in I don't know, somewhere in West London. Let's say Shepherd's Bush, right? I found a really nice flat in Shepherd's
Yeah, all
Bush,
right.
right? Uh, not that I could afford it.
Come on.
Listeners, I can't afford a place in Shepherd's Bush. Not yet. Actually, no, I don't think I can. I don't think I can.
Claim it.
So okay, so say I liked one. What would I do at that point? What's like the process at that point?
So if you found a property liked in Shepherd's Bush, I'm assuming by that point you've
Hmm.
already spoken to a mortgage broker and you've already got your deposit
Yeah.
saved up and you understand what you can actually afford to
Okay.
buy. Those are the steps that you need to take
Okay.
first and foremost. And even
Yeah.
before that, I would also
Hmm.
say you need to assess every single option that's available to you. So there's a few steps that I would even
Hmm.
discuss and really hone in on before anyone even starts looking for a property. So that's what I would say in that
Okay.
particular instance. In terms of the next steps, once you found a property that you liked, I would definitely say speak to
Hmm.
me, get a report on that property because that's one of the services that my business provides, a
Okay.
detailed report on all the
Okay.
data attached to that specific property. So I would definitely say that little plug.
Hmm.
But then I'd also say
Okay. Love it.
understand the value of the property. So you understand
Okay.
what level of offer you should make. And you can do that in a number of different
Hmm.
ways. I think the first thing to do is really understand the context and the situation behind the sale. So you want to understand number one, why the seller
Okay.
is selling. You also want to understand has the seller found an onwards purchase, or is there a connected onwards sale? You also want to understand how many offers have there been on the property, how long has it been on the market for. There's a number of questions you can ask, but those ones I mentioned are really important to understand what context
Okay.
the property is in. And then I'd also look at some empirical data as well. So I'd look at sold
Okay.
comparables. I'd look at what similar houses have sold for within the last year. And I'd also look at potentially
Yeah.
what the market's doing at the time as well. So those are a lot of things that you should do before putting your offer forward. And once you've done that work and you've understood all of those things, you're in a much better position to make an appropriate offer. And that offer might be the asking price. It might be 10% less than the asking price. And in this crazy market we're in, it could be 10%
Yeah.
over the asking price. So I would definitely say those things.
Okay. Wow. I love that. I love that. You know what's crazy? You know what's crazy? Do you know what I did, right?
Yeah.
I also looked at crime stats.
Yeah.
I also looked at crime stats. I'm like, look, yeah, I'm moving. Okay, so at this point, I weren't really living in the hood anymore.
Yeah.
I was
Yeah.
living in a more nice area. So I was living in Greenwich.
Yeah.
But around the corner, if I walked towards Deptford, it was still kind of the hood. So I
Yeah.
was like, look, I'm kind of moving out of the hood. I want to live somewhere as peaceful, at least more peaceful than where I was living before. So yeah, so I was checking crime stats, which are available
Yeah. Yeah.
online. I think it's through. I can't remember where it's through. Yeah, so you can check that. So that was quite good. And all the tips that you said, I was pretty much doing that, checking like what other properties were sold.
Yeah.
How much did this sell like for beforehand as well? Like just a lot of things. Like it's crazy. Like when I feel like the more viewings you do, the more you get to understand the process and what you need to do. So yeah, it's crazy. Okay, so cool. So then you put in your offer, right? Put in your offer, whatever price it's at, right? And then what happens at that point after you put in your offer?
Yeah, so that's what's called the negotiation phase. So you can typically
Hmm.
go back and forth, maybe, you know, 3 or 4 times, potentially less than that. And then hopefully you finally
Yeah.
agree a sell price. So that stage of the home buying process is all about negotiation. And then the next stage is all about preparing for that sale to then proceed, not just with the finances, but also with the legals as well. And those two things work alongside each other. So I would say at that point, any decent buyer needs to instruct their solicitor, which is basically a term for just paying them the money in order for them to get started to carry out what's called conveyancing. And then I'd also, at that point, instruct your mortgage broker, if you're using a mortgage, to make a formal mortgage application, which is very different from an agreement in principle. An agreement in principle is a soft check on your credit file. It doesn't involve anything really that carries weight, that can tell you exactly how much, or that can tell you what mortgage you're going to get. It's just an indication of what you could spend in principle. So once you do those two things, instruct a solicitor, get your mortgage broker to make an application, it's then in the hands of those two professionals to then progress with the sale. So conveyancers do their legal work in tandem with the other side's conveyancer, and then the mortgage broker is in contact with whatever lender you choose for them to organize
Yeah.
surveys or mortgage valuations on the property and everything else that they need to do in order to give you a mortgage.
Wow. See, crazy detail, crazy gems, crazy gems. Okay, so then, so assuming that it's all fine, legals are all fine,
Yeah.
finances all fine, mortgage is all fine. That's gone through, and it's a lot, right? Like
Yeah,
you're
like,
dealing with what? How many? Three parties here, right?
yeah, you know what's funny? Like
Like three parties, your mortgage. Yeah.
I did a presentation the other day, and I think I made a list of every single party
Mm,
involved in the home buying process, and I think it was around 15 people,
mm.
15 different parties in total,
Wow.
involved in one transaction, which is crazy when you think about it. And that basically tells you why
Mm.
the home buying process doesn't happen typically within a week. The average time frame for a
Yeah.
sale to go
Yeah.
through from point of being agreed to exchange of contracts is around 8 weeks, potentially 12 weeks. And that's because of this, there's so many different
Yeah.
parties involved, all with their vested interests, usually just trying to protect their interests, which is why so much due diligence happens.
Yeah. Completely. And yeah, and they're trying to get paid. You know what's crazy for me, right? So when I bought my place, I almost not. I wasn't not gonna skimp out on a surveyor. I
Yeah,
got one, right? But I was trying to not get the full structural because I was like, don't
yeah,
want to really spend an extra £200-300 on it. But I was like, you know what? Ato, this is the biggest purchase of your life. You got to go through with it. And luckily I did. he found out there was like £3,000 worth of damp works to be done.
What did he buy in the end?
And obviously, yeah, it was a house. Yeah, it was a terrace house, right?
Wow.
That I bought, right? But there was damp in the living dining room, and then on the external of the kitchen. So I don't know what the previous home buyers had done. I guess because what happened was they had bought it a year before I bought it.
Yeah.
And I think they must have bought it from maybe their previous owners didn't take care of it, so they wanted to do a quick renovation and get out and just try and sell it to a sucker. I was like, I'm not gonna be a sucker. So yeah, so the surveyor said, yeah, there's damp. So yeah, I passed on the cost to them. I was like, you guys got to do it before we complete anything. I'm like, I'm not. They were like, oh, they're trying to get me to sign a contract, and my lawyer's like, I told you, don't sign that contract. Don't sign it until they pay for it and they sort it. Then you do it. And the estate agent was like, no, that's not how lawyers work. Da, da, da. I was like, mate, my lawyer's got my back. Like, yeah. So until you guys sort it, when you sort it, then I'll sign. But I'm lucky because if I were to do that, I feel like if I were to do that in this market now, I probably would have got gazumped.
Yeah, and you just
probably would have got gazumped.
You just pointed out one of the many things that can go wrong within a property transaction. That's just we've really sort of whizzed over it, but so many things can happen with legals. Restrictive covenants. What else can happen with legals? Service charges. Works that need to be done that haven't been paid for, and there's just so many disputes that can arise, especially with leasehold properties as well. So you'd be here for 2 months explaining every single possible scenario, but it's just best to it's just best to be aware of that, or at least understand that it's not smooth sailing when it comes to conveyancing.
It's crazy. And just to explain, what does gazumpt mean?
Yes. So gazumped is essentially when an offer has been agreed on a property, and then another buyer makes a higher offer, and then the seller switches to that buyer, which has happened a lot in this market.
Crazy.
Again, that's because nothing is legally binding until contracts have been exchanged. So yeah, that's what gazumped means. It's not a nice thing to happen.
That's crazy, man. That's like that's like something out of like a mafia movie or something like that. It's just mad. Okay, cool. So say you're happy with the house, you've gone through your finances, legals, mortgages. Then are we at the stage where we look at completion?
Yeah, so then comes exchange of contracts. So at that point, to exchange contracts, you want to obviously make sure that you have a mortgage offer. You also want to make sure that the solicitor is satisfied with all of the responses to the inquiries that they've raised on the property. They will then provide a report to you. It's just a sort of bunch of paper that no one freaking understands, but you just read it and look like you do understand it. I do understand it. Then you once you do that, once a mortgage offer is in place and the lender's agreed, then the solicitors will be in touch to exchange contracts, which is essentially just a call for solicitors to exchange contracts, but physically nothing actually really happens. But that's what an exchange contract is. And once that's done, then you also have to arrange buildings insurance as well. If you're buying a freehold property, you can't exchange without building. Sorry, you can't complete without building insurance in place.
Yeah. I remember that. I remember them making me get like home insurance, which is crazy. Do you know what that is? Why they make you get home insurance?
Yeah, 100%, because it's the lender's interests, number one. If anything happens to the house needs to be insured. So it's just a legal requirement of any mortgage.
Yeah, they're trying to protect their money.
Yeah.
I'm not surprised. That's what banks are like. Okay, so after the exchange part, what happens next?
Then it's all about post-exchange activities, which is the solicitors registering things with land registry, dealing with what's going to happen on completion day, which is just speaking to all the relevant parties that were involved with the sale. So yeah, pretty boring stuff, if I'm honest with you, but it's all down to your solicitor. As a buyer and a seller, you don't have to really do much. Everyone celebrates and pops champagne when they've exchanged contracts. And that's fair enough, because there's a 99% chance it's going to go through. It's very unlikely to fall through at that point. So that's when that's what happens during that point. And then on completion day is when you officially own the house.
Okay, okay. And then you can start doing your Instagram.
Yeah,
I'm a homeowner with your keys.
yeah. You can start posting. And I bought a house. I'm only 5 years old, and I managed to buy a house at 5. I'm the youngest homeowner. Everyone loves talking about the rate.
Oh man.
You know what's really funny as well?
Yeah.
At the time when I bought, I was
Mm,
23. I was 23 years old, 23 or 24, and I just didn't think it was a big deal to buy a house that young. I didn't think it was a big deal, but
yeah.
I wish I made a bigger
It
deal.
is a big deal. That's a massive deal.
I wish I made a much bigger
Yeah, I mean, you gotta celebrate it.
deal.
Yeah, yeah, man.
Yeah.
Like it's just like one of them ones that you gotta celebrate your wins at the end of the day. You know, it's a big achievement for you to get on a property like that. And I know it sounds like we're mocking. We're not really mocking.
Yeah,
Like it's a
we're
massive,
not, we're not.
massive achievement. And you know, celebrate it how you want to. If you want to do Instagram, everything, go for it. Do you know what I'm saying? You worked hard to do that, so I get it. You know, you're one of the fortunate few that managed to get onto that, and hopefully the people that are listening to this,
Yeah,
you've
yeah.
managed to get onto that with these tips. Okay, cool. So that's the process. If you got any questions, reach out to Topsy on Instagram. We'll talk. We'll get his at, and it'll also be in the description as well. So okay, let's go into first time buyer schemes, because right now property, we just keep on hearing about how expensive it is, how much the prices are going up every month. It just seems to be a headline. I've never seen so much headlines about property prices and inflation. I know it's high, I know it, but we just keep on seeing record breaking, record breaking. I'm like, okay, cool. I'm tired of seeing this now. So, fortunately for some of us, there are some schemes out there.
Yeah.
Can you break down the first time buyer schemes that are out there to support people with getting their first property?
Yeah, 100%. There's quite a few. First one, the most famous one, I would say, is Help to Buy, which is essentially a
Mm-hmm.
government equity loan where they will put up either 20% or 40% in London as an
Mm-hmm.
interest-free loan that will allow you to put down a smaller
Mm-hmm.
deposit and take on a smaller mortgage, which essentially helps you increase your budget. So that's what the Help to Buy scheme is. It's available now, currently for first-time buyers only, and there is a price cap in London of £600,000, and it's also currently only available on new build properties. So that scheme ends, I believe, in April 2023. So you've still got a year left to find developers
Seriously, next year?
next year. I mean,
Oh wow,
time really
that's
flies.
soon.
Time flies, and
Wow.
yeah, so you still got some time in order to try and find a developer who's participated in that scheme. What
Cool,
else
cool,
is
cool.
there?
And what other ones are there?
Yeah, so you've also got shared ownership. People love to hate on shared ownership.
Mm-hmm.
I don't think any government scheme is,
Mm,
by definition, good or bad. It's totally dependent on who you are. Like
mm,
every scheme is good, every scheme is bad. It's just
mm-hmm.
who you speak to. But shared ownership, people love that one because it allows
Yeah.
you to buy a share in a new build property and pay a subsidized rent on the share that
Mm-hmm.
you own. So, for instance, if you're only buying the
Mm-hmm.
25% share, you only have to put down the deposit of that 25%. So, in some cases, you're paying as little
Yeah.
as $3,000 as a deposit to buy a whole property, potentially even in London,
Mm-hmm.
which is an incredible way to get
Mm-hmm.
onto the property ladder and not have to rely or not have to be scared that your landlord's going to sell and not have to only pay rent. And you've also got the ability to
Mm-hmm.
staircase upwards and increase your shares in that property over time as well. So that's
Yeah. Yeah.
another.
Yeah. Yeah. I like that one. Yeah. I think I was skeptical about shared ownership, but I think the more that thought about it, and with these property prices increasing so much, I just think it still keeps it accessible for some
Yeah.
people. Yeah, okay.
I mean,
It's out of the ways to get onto property. It's probably not that ideal, but still it's better than
yeah,
it's if you want to get onto property, it's still a good avenue,
yeah.
personally.
It's all relative, man. Like nothing is. You can't call something good unless you're comparing it to something else. You can't call something bad unless you're comparing it to something else. What is
Yeah.
it good in relation to? But if your only option is
Mm.
renting and you have 3 kids and you need security of a roof over your head, but you can't afford to buy something by yourself in the open
Hmm.
market, then shared ownership is a brilliant option. But if you're an only child, you've got the help
Yeah.
from bank of mum and dad, and you got 500K in the bank, then maybe shared ownership is a bad option. So it just depends on who you want.
Yeah.
And
Yeah. 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 No, yeah, I love that.
yeah, those are the two main ones. And then obviously you've got the 95%
Hmm.
mortgage guarantee as well, which is just a government-backed initiative that's
Okay.
encouraging lenders to provide 95% mortgages, allowing people to put down as little as a 5%
Hmm.
deposit, which
Hmm.
is which is again big help if you've got good income but you haven't got the ability to save up a large deposit. So that's another scheme which is available. You've also got first homes. You've got
Yeah.
right to buy. You've got obviously the lifetime ISA, which is a savings government scheme. There's a load of things out there to really help you, and that's all worth researching before you make a decision to buy somewhere.
Yeah. No, I definitely hear those, man. Some great schemes. I personally use the lifetime ISA.
Yeah,
Great, brilliant scheme. You know, you get free money from the government.
yeah,
You know, people always ask what the catch is. The catch is you're buying your first property. That's the
yeah,
catch.
yeah.
You know, it's free money at the end of the day, right? That you should just make use of. And yeah, I made use of it. I was skeptical as well, and then when I started seeing the bonus getting into my account, I was like, wow. And then when I actually completed on my property with it, I was like, wow, it worked.
Yeah, you
There
use
was no, I didn't lose anything out of it. Yeah, so
no.
crazy benefits. Are there any drawbacks though on the help to buy and the shared ownership?
I mean, with shared ownership, the main drawback people often refer to is the fact that you have to pay
Yeah.
100% of the service charge, even though you own 25%
Okay.
of the property. So people talk about that quite
Yeah.
often. I'd also say with shared ownership, a lot of people buy shared ownership properties because they want to put down a low deposit and buy as little a share as they possibly can. So if you've staircased to 75% and you try and sell it, the market for your property is really small and it can be difficult to sell it unless you staircase more.
Okay.
Those are the two main drawbacks people talk about when it comes to shared
Okay.
ownership. With help to buy, yeah, the obvious
Mm,
drawback is that you've got an equity loan from the government. So keyword is
mm,
equity. Whatever their stake is worth
yeah.
at that time, that's what they're going to say. That's what they're going to take. Sorry, when you sell it.
Mm,
So 40% isn't a
mm-hmm.
fixed figure. If it goes down, obviously their share goes down. But if the value of the property goes up, the value of their share goes up that they take when you sell it as well. So that's the main drawback I would say with help
Okay.
to buy. But again, all relative compared to what your other options are.
Okay. Okay. That's fair enough. And you know, a lot of people that will be listening, maybe their income isn't so high, right? Maybe it's like below average, right?
Yeah.
Do you think that they should use these schemes to get themselves onto the property ladder? Because they also have aspirations, and it's fair for them to also have aspirations. Obviously, I know this is a loaded question because it really depends on where they live. You know, if they're just on the average salary and they live up north is much cheaper than in south, right? Well, okay, let's use an example to make it easier. Say somebody was below, they had a below average salary, right? Let's
Yeah.
say there was on maybe 30,000 a year, right?
Yeah.
And they live, okay, let's not do London because London's difficult, but let's say on the outskirts of London, maybe northeast, northwestish, maybe
Yeah.
coming up towards Birmingham, right? And they saw these schemes. They were like, okay, look, help to buy, maybe I could probably afford it. Shared ownership, I could afford it. Do you think generally is a good idea for them to do that?
Yeah, I mean, I would definitely just say one thing I would definitely say as well is patience. I would say you need to be
Okay.
don't feel like you have to rush into anything. So as much as I bought my
Mm-hmm.
property when I was really young, if I'd potentially saved up a bit more money and if I'd waited till my earnings increased, I
Mm-hmm.
probably could have bought maybe a much bigger house, potentially a much bigger house. But I was just so keen to get on the ladder straight away.
Mm-hmm.
I don't regret it because it's obviously gone up in value a lot. But I potentially could have had a larger percentage growth if I'd gone for maybe a more desirable property in a different area. Not to say my property isn't a good area because
Yeah.
of where I live, but I'm just saying patience is really important. Don't feel like you have to keep up with the Joneses or don't feel like you have to, follow the crowd just because they're buying properties really young.
Mm-hmm.
It's tight for you, and if it's becoming, stressful and it's really putting you towards the edge, then I would say probably don't do it
Mm-hmm.
actually, because there's a lot of homeowners
Yeah.
who have a great house, but they've got a tiny chunk of equity in it, and they're fighting to pay that mortgage,
Mm-hmm.
they're fighting to pay those energy bills every single
Yeah.
month. So yeah, you got the great
Yeah.
showpiece house, but you're struggling, bro. Like you're struggling. So I would definitely say
Mm.
patience is really important in that respect.
Yeah, it's mad. It's mad because like I do definitely understand like people want to definitely get onto property, but I agree. I feel like the situation, if it's gonna be like you're gonna put yourself into a position where it's gonna be a proper struggle, I just think like it's not even worth it, really and truly, to pursue it. And like you said, patience, right? Just wait a few years. Even when I bought mine, I still wanted to buy it a few years earlier, but I was like, you know what, like I'm not ready. Let me just wait another 1-2 years to do it, right? And I know like a lot of people are like worried about like how fast prices are increasing, but I feel like there's always going to be a market for everyone. You know, maybe you just have to compromise a little bit. And talking about compromise, so I'm from London. You're from London, and you know, talk of the town is always London when it talks about like when we talk about property prices as a place of being too expensive. A lot of people who live in London feel like they grew up here, but they're not going to be able to afford here, right? So, is there any other areas that you think first-time buyers should consider?
I say this all the time. It's really important to. I understand that it's difficult to potentially look somewhere else or outside of your initial search location. If you've lived there your whole life, it's
Yeah.
quite kind of sad having to move out. But every generation has at some point had to go through this. You know, at some point it was really cheap to
Hmm.
buy in Notting Hill, but those people had to move a little bit further out to maybe Westbourne Park or potentially
Hmm.
even further out of West London. And it's similar with now. London is a great place to live, obviously, and it'll be great to be able to abide there. But literally going 5-10 minutes up the train line or 20 minutes outside of your initial search location can save you, I don't know, like potentially 50, 60 grand on the asking price of a property.
Hmm.
So I think now first time buyers, one of the best things they can do is be flexible on search location. And the
Hmm.
first place you buy is never going to be the best. It's unlikely to
Hmm.
be the best.
Yeah.
You're probably going to be able to buy something bigger and better. Your earnings are going to
Yeah.
go up. So yeah, like it's not that deep, is what I'm trying to say. If you have to look a little bit further out, so I would
Yeah.
say Londoners look at the outskirts of London, and that's also where a lot of the capital growth is happening right
Mm.
now as well. People are working from home,
Mm.
don't have to be as close to a station anymore.
Mm.
They can, they want a bit of outside space. They want a garden. They want some greenery, some peace and quiet, and you can get that, and that's becoming
Hmm.
more valuable as time goes on. So I'd really encourage looking further out if you can.
Okay. Yeah. Love that. Love that. Love that. And it was something I had to do as well. I faced that reality. I was like,
Yeah,
I want to live in zone 3. And I was like, I can't do even a full zone 4. So I was like, okay, zone 6 it is.
yeah,
That's what it has to be, you know. And do I regret it? No. Is my quality of life better? Yeah, because I chose to sacrifice. And funny enough, it's crazy because I made this decision I bought like September 2019. Of course, I didn't know the pandemic was going to happen.
yeah,
And then you end up having to work from home for a year anyway. So
yeah,
actually, how important was it to be as close as you thought you needed? And it's like you said, as long as you're on a train line, a good train line,
yeah, for sure.
you pretty much can get to everywhere that you need to get to. So yeah, no, I completely agree with it. I think sometimes I feel like we're so fixated on living in the central of London that we forget all these other amazing areas that are on the outskirt
Yeah,
that have got good fresh air, no pollution.
agreed, agreed.
Oh man, it's so crazy. So for first time buyers, they like again, like for me, right? I didn't really know what I needed to look for, like when I was like, you know, in an area. What do I look for? So when somebody is, looking to buy a place in a particular area, say that they start to look at the outskirt. What do you think they should consider?
I think it's really important as a first time buyer when you're looking in a new area. Obviously, you looked at crime statistics. It wouldn't be number one on my list, but I would definitely say it's important. Um, but as a first time buyer, the most important thing for you to look at, in my eyes, is somewhere that you feel you're actually going to enjoy living. A lot of people sometimes think about
Hmm.
investment. They also think about, oh, but what's this going to be worth in 5 to 10 years? Blah blah blah. But for me, there's a lot of excitement about having somewhere you can call your own. When I was initially looking,
Yeah.
apologies. When I was initially looking, I was looking in a place called St Albans. I was like, oh, no, I got to live here. Like it's desirable, right near the station. But the properties I could afford
Mm.
were rubbish. They were stuck in the roof. They had eaves everywhere, and it wasn't really nice. A lot of work needed. And I basically said to myself, I actually want to enjoy. I'm spending all this money. Hold on, let me enjoy where I'm living. So
Mm.
for me, just make
Yeah.
sure you're stood in that property. You can see where you would put your stuff.
Mm.
If you can't really see that and it's more about investment and capital growth, for me, it's not really for you. That being said, a lot
Mm.
of people are buying first time buy to let properties now. And that's a whole different conversation. So you can put down 25% of the property and it's all about renting it out. Then I would say, yes, all about the return on investment, all about capital growth, all about the cash flow you're going to get. And that's a totally different conversation. But for the place that you're going to live in, please, for the love of God, make sure you actually enjoy the four walls that you're about to invest hundreds of thousands of pounds into.
Yeah, I completely agree. Imagine just buying a box. You know how sad that would be.
What is the
Just
point?
buying a box, just a box house. Like, yeah,
What is the point?
it's true. It needs to be your home. Happiness. You want happiness. It's not about the sake of buying for the sake of buying, you know. And I think having these conversations, we want to make it clear. We obviously want to give you the tips, the best tips to buy what works for you. But at the same time, we also acknowledge that patience is a key thing, you know, and being a bit flexible in terms of like locations, in terms of, you know, what you're looking for and stuff like that. And that takes me to another thing, right? So for me, when I was looking, I was also I was looking at flats as well, right? And at the time I didn't mind. And then some of the flats I liked that were nice, massive service charges. And then there's other ones I'm like, oh, but they're in a council building. I don't want to live in a council building again. And I was just like, oh, you know what? I don't want to do flats. I'm just going to, you know, move to a house. But that's nothing against flats. I have no issues with flats. Do you think if that's all you can afford, and this is the area you want to live in, because that's some people, right? They're like, I want to live in this area. I can afford a flat. That's where I'm living, right? Do you think that's what they should go for that? Like, what's your thoughts on flats?
I'm in a flat
Is
myself.
alright.
Look at my place. It's got lovely high ceilings. You know, the living room's massive.
Yeah.
Nice separate kitchen, hallway.
Mm-hmm.
Square footage of this place is, you know, really good and it's suited my needs. My flat also is in a really nice development. The service charge accounts for window cleaning, the grass being cut, and I'm just not the sort of person who wants to maintain everything about the house currently in the stage of life that I'm at because I'm just busy doing other stuff. So yeah, it's all about your needs and what your preferences are. A lot of people say, no, never buy a leasehold property, never buy a flat. And I was like, it's just a silly thing to say. Um, just make sure if you do buy a leasehold property, make sure that the number of years remaining on the lease is a good amount of years. I'm in what's called a share of freehold property, which is not a freehold. It just means that you have a leasehold, but you also have a share in the freehold, which effectively makes it that you never really have to pay to extend your lease, which is which can be a big cost for a lot of people. Of course, there might be admin costs attached to it when you have to extend your lease, but my lease is like 950 years, so I'm never gonna have to extend it.
Wow.
But yeah, buying
Yeah.
absolutely fine, and they don't appreciate at a slower rate than houses do. Of course, the average value of a house across the country is higher than the average value of a flat, but the growth rate is pretty much exactly the same. So I would say buying a flat is calm. Just whatever your preferences are and whatever suits you.
Yeah, I love that. I've seen some amazing flats.
Yeah,
Just
bro.
saying, I see some sick. Oh man, some crazy ones. And you mentioned leasehold. So what's the difference between leasehold and freehold? If you can explain that.
Yeah, leasehold essentially means best way to describe a leasehold is actually that you're renting. You're still renting actually, but you're just renting for a number of years. So you're renting from the landlord. Another name for a landlord is a freeholder. The freeholder is the person who actually owns that building, the outside walls, the ground below, and the ground and the air above. And then you're essentially renting that property within that landlord's building for a set amount of time, typically 100 years, 125 years, or in my case, because we collectively bought the freehold as a building, 999 years. So that's what a leasehold property is. A freehold, which is what you've got, I'm assuming, is when you actually own the whole building. You're not a renter, you are the landlord, you are the freeholder, and you own everything externally, ground below, air above. It's your building. You don't pay any service charge. Typically, some freehold property.
You own the air, you know.
Um,
Imagine someone owning your air. That's bad, isn't it?
yeah. But then again, you do have maintenance for a house as well. You know, with my building, if the roof starts
Lots.
leaking, I don't have to pay for that. That's within my building's insurance cover and within my service charge. If your roof starts leaking, you got to pay for that.
Yep, it's all on me. It's all on me. It's crazy. It's crazy. So, like you said, there's like, there's pros and cons for each one. And actually, this takes us on to costs. You mentioned a few costs there. What are your typical costs? So we mentioned a few. We said deposits. You said okay, repair works. We mentioned surveyor as well. What other kind of key costs does a first time buyer have that they need to consider?
Yeah, buying cost is like a big one. The main buying cost is stamp duty. Of course, everyone knows about that.
Mm-hmm,
When you're a first time buyer, you have what's called first time buyer stamp duty relief up to £300,000,
mm-hmm,
which means that you pay no stamp duty
mm-hmm,
essentially of anything up to that amount. So that's the main cost that you have to
mm-hmm,
be aware of if you're a home mover or if you're buying above £300,000 as a first time buyer. And then there's a lot of other miscellaneous ones. Another large one is obviously solicitors' costs, which can range anywhere from £1,000,
mm-hmm,
£3,000 if you're buying a leasehold or help to buy property, because that involves more work from the
mm-hmm.
solicitor. And you've also got survey costs, like you've got a full structural survey, can be 500 quid, £1,000. So yeah, those are the main ones. And then there's a lot of other little ones here and there that can make it add up. But I would say probably earn £5,000, excluding stamp duty, account for when you're buying property that can come as
Okay.
an unexpected cost when you're looking to buy somewhere, because solicitors,
Okay.
potential surveys can amount to £5,000 in the worst of scenarios, maybe even more. So have that as a buying cost buffer outside of your deposit and stamp duty when you're buying somewhere, if possible.
Wow, wow, ugh, wow. Great, great. See, gems throughout, people. You're hearing it here. So you alluded to it a little bit before. You said you mentioned that some first time buyers rent out their first property.
Yeah.
What do you think's better? Do you think as a first time buyer you should buy a property to live in first or buy a property to rent first?
I mean, again, it's not better or worse. It just literally depends on your situation.
Mm,
I think it's a really good option, personally,
mm-hmm,
in my opinion, because
mm-hmm,
um, sometimes people are in a rush to get out, and sometimes they have to. Maybe there's not enough space at home.
mm-hmm,
Maybe they need to move for
mm-hmm,
work, so they have to live in their property that they buy. So sometimes
mm-hmm.
it's necessary in order to do
Yeah.
that. But if you don't have to move out of
Mm-hmm,
the family home, I think buying to rent out is a great option. I know a lot of people who've done it recently,
mm-hmm,
friends online, where they've gotten a buy-to-let mortgage as a first-time buyer, put down 25%, bought a property potentially in the Midlands or up north for, in the low hundreds of thousands, and they've rented it out and they still live at home.
mm-hmm.
Great option if you can still live at home. So definitely something to
Yeah.
consider if you're a first-time buyer, or potentially if you are going to buy somewhere and you can't afford to put down
Yeah.
25%, I would just say buy your own place and potentially try and rent out a room if there's another room
Mm.
there, to a second person who can live with you. So there's a number of options you got.
Yeah, yeah, yeah. No, that makes sense. That makes sense. And yeah, like you said, it really depends on you, right? Like in terms of what you're doing. But yeah, it does sound like a good way to go. Like if you can rent out your first property and just start building your property empire, and then finally get your own. I think some people even don't even ever buy. They only just
Yeah,
buy just to rent out and just continue renting. I've seen some
correct,
people do that, and it's
correct.
very
A lot,
interesting. That's a
yeah,
very, very interesting approach.
a lot of property investors actually, a lot of rich property
Mm,
investors or rich people in general, wealthy people in general, actually just rent. Always rent. Elon
mm,
Musk famously at the moment doesn't own any real estate, doesn't own anything, just rents property. I guess he's an extreme example, but even property investors themselves, they specifically
yeah.
see property as an asset that should provide them with a monthly cash flow, and they almost see property
Mm,
to live in as a liability and not necessarily an asset. And I think that term is a bit,
yeah.
I think it's a bit, it's arguable whether you want to call it a liability or an asset. We can go down that road, but a lot of wealthy people
Yeah.
see property purely as an asset that should yield them profit every single month. And if you're living in a property, that's not possible. So yeah, you're absolutely right, and I think
Mm,
it makes a lot of sense actually. If you can rent somewhere and only view property as an investment vehicle.
yeah, yeah, yeah. Yeah. It definitely does. It's very, very, very. I find it fascinating to be honest.
Yeah.
Um, so we're trying to get our listeners to obviously avoid like any mistakes. What are some of the common mistakes that you see first time buyers doing?
Common mistakes. Number one, looking for a property before
Mm, mm,
before you've even looked at your affordability. That's the number one mistake. People jump straight
Yeah.
to the right move.
Yeah.
I posted a funny meme, I think, a few months ago. You know that kid who stretches to the top step of the staircase and skips out like 4 or 5
Yeah.
steps. And I placed like 5 or 6 things that you should do before you buy somewhere. And on that top
Yeah.
step was looking at a property.
Yeah.
So that's the number one. That's the number one mistake. I'd also say another one that comes to mind is underestimating how long it takes to buy somewhere. You sort of make an offer and you start celebrating when it
Yeah.
gets accepted, forgetting that it could potentially take another 3 months, and in some scenarios maybe another 7 months to get it through.
Wow. That's crazy. 7 months.
Yeah, potentially.
Wow. Imagine waiting that long to move in.
I've seen none. Man,
It's not for the faint-hearted.
no.
Yeah, you must have seen a lot of crazy situations, right? Like,
Yeah.
it's just.
I've had sales take. I've had sales take,
That is.
like, more than like a year and a half before. Like, I'm not joking, but yeah,
18 months.
yeah, man, yeah, extreme.
Wow. That's crazy. That's absolutely crazy. And there you have it. It's just, this is the game we're in, the property game, you know. And
Yeah,
I think, you know, the key terms that we're hearing here is, you know, patience. So, you know, I wanted to end with this question because I know a lot of people are like worried about getting onto property ladder, and they're like very, you know, they're hopeful. Let's say they're ambitious. They want to get onto it. So if they don't have like a high income, we're gonna go again to lower income, because I don't need to worry about the high incomers. The high incomers, yeah, for them they need to sort out their credit, their budgeting, but they're in a good place because their affordability. But the low incomers, it's a little bit more difficult for them, yeah. And let's say they're feeling hopeless, yeah. What can they do to get onto the property ladder? Because that's the golden question, right? That's always the golden question that people are asking. What can I do? Atto, I don't earn that much, right? What can I do to get myself onto the property ladder?
I would say the government scheme's number one. So Help to Buy allows you to have a lower income in order to buy somewhere, because the size of the mortgage you're taking is a lot lower. If you're taking a 40% equity loan and you're putting down a 5% deposit, you're only taking a 55% mortgage, right? I think I've done the maths right. If I haven't, that's embarrassing, but I think I've done it right. And then, so yeah, the income requirements are a lot lower. Secondly, shared ownership. Again, income requirements are a lot lower because you're buying a share in a property. And then another thing which doesn't get talked about
Yeah.
a lot is something which is called joint borrower,
Okay.
proprietor, which essentially means that you're using the income and the help of another friend or family relative in order to combine your income with theirs to get a larger mortgage. So they almost
Wow.
act as a guarantor for your mortgage, but they're not on the property deeds of the property. So there's a lot of companies who are really pioneering that type of mortgage at the moment. One of them called Generation Home, who I would recommend people looked at in order to try and get help to get on the ladder if you've got income struggles. So those three things: number one, consider Help to Buy, consider shared ownership, consider looking further out, and consider joint borrower or sole proprietor.
Wow. I've never heard of that. Joint borrower, sole proprietor. I've never heard of that. Wow, that sounds brilliant.
Yeah.
Wow. You see, this is why I brought you onto the podcast, so that people can hear about stuff like that, because, you know, a lot of this stuff isn't advertised. Like Help to Buy has been around for a while, so that's advertised. Shared ownership is advertised, but this sole proprietor one, I've never heard of that. So that is, wow, that is crazy. And there you have it, folks. Great episode by Topsy. Just dropped so many gems. So what's next for you? What are you planning? What you
What's
got in the
next for me?
pipeline?
I would say,
Mm-hmm.
so I really want to be more. I want to work more in media, 100%. When I say media,
Okay.
TV, radio, more online internet stuff, YouTube, Instagram, TikTok. I think we're all trying to grow on that at the moment, slowly but surely. In God's time, your time, God's time is always the right time. So yeah, like I really want to do more. Like I'd first and foremost call myself a presenter. Actually, that's really what I want to do. So that's one thing, and then secondly, also just really grow my influence and continue providing value. I think if you're on this planet, you're on this earth, just try and help people as much as possible. At least you can leave Earth knowing that you helped a lot of people if you can. So yeah, like the journey is
Yeah.
the destination, right? We're all trying to, find this magical place where we'll finally be happy and satisfied, but it doesn't really exist, does it? The journey is the destination, because
Yeah, it doesn't.
once you reach your
Exactly.
destination, you're going to want to
That's
reach another one, right? So, I'm trying to learn that
100%.
myself.
100%. Yeah. It's crazy. You have to always like remind yourself, like, even like for us doing what we're doing, it's a very unique kind of experience because we're trying to build something that didn't exist 5 years ago, basically, as a kind of industry, let's say. So we're trying to build this industry, and you kind of, some of you wants it now, and then you think, okay, but if I got it now, what fun am I having, right?
Yeah,
The fun is these interactions, talking, trying to, give people information,
correct.
interacting with people, seeing what they're going through and helping them. That's the fun part of all of this. Of course, the success is nice, but there's only so much like fun there is with that. You just need a bit of a balance. So yeah, no, I completely agree with you on that. So what's your final word for the listeners?
My final word for the listeners, what comes to mind?
Mm-hmm.
Um, Final word for the listeners is, final word for the listeners is just don't give up. I feel like
Mm-hmm.
sometimes think your actions are really pointless and they're not resulting in anything.
Yeah.
But if if you've got a real reason and a motivation behind doing what you're doing, and
Mm-hmm.
and you feel like you got a sort of purpose behind it, and you're getting good feedback, you feel like you're good at it, don't give up. I think whatever game you're in,
Mm-hmm.
it's a case of consistency and longevity, right? Whether it happens in a year, whether it happens in 20
Yeah.
years, kind of irrelevant, I think, in the long term. And just enjoy the journey along the way. And I say this as if I'm doing this a lot myself, and I'm really not, as much as I would like to. But yeah,
Mm-hmm.
just really try and enjoy the journey, man. Don't give up. Yeah, like obstacles are going to come along, but just accept that that's part of the
Mm-hmm.
journey. If it was easy, everyone would be doing it.
Yeah, exactly. I completely agree with you, and I love that final word, being tenacious. And yeah, no, it was great having you on the podcast. Thanks so much for blessing it. Thanks so much for providing so many tips. We haven't gone through first time buyer tips in that much detail, so I'm sure that the listeners are gonna appreciate it
Yeah,
and follow you. Tell them where they can find you.
yeah, sure. So at Topsy Taiwo on Instagram, which is
Hmm.
TOPSYTAIWO.
Hmm.
That's on Instagram, that's on Twitter, that's on TikTok as well. And then my business, my property advice, and my property platform, if you want to call it that, is at Property Purchaser on Instagram. So that's at Property Purchaser on Instagram. Follow me on there, drop me a DM if you've got any property related questions. I'll be happy to answer them if I can.
Great. Thank you so much. Make sure everyone you go and follow Topsy. Like I said, property expert here. You see how much, and we're gonna do another episode. You see how much info just for first time buyers we're providing you with. We're gonna drop you more gems, property investing when I come through, and through any other things that you all wanna hear. But yeah, thank you so much, Topsy, for coming through and blessing the podcast. Thank you to the listeners. The Takeoff Podcast is officially back, and we ain't going
One,
away anytime soon. Thank you.
come on, I like it, man.
See you in a bit.
See you later, bro.